What is good, everybody? Today is August 19th. This morning had a super clean short setup for around 3R. So without further ado, let's just hop straight into the education. All right, so first we have to understand where are we at on the charts, right? So Monday and Tuesday, we've had zero news. We've been setting up for FOMC news on Wednesday and then a little bit of Thursday, Friday, red folder news, right? So Monday and Tuesday have literally just been accumulating price action setups. And in my opinion, what I expect to see is that this right here, this big move today, is going to be that start of that manipulation to go ahead, displace higher, then run all of that generated liquidity to the upside to continue that bullish trend. Because in my opinion, this has just been really generating buy side liquidity, right, for us to go ahead and take later, right? But let's go ahead and look at what happened today that allowed me to take a short, right? So going into the open, we have a ton, literally there's no bias. And at days like this, there is no bias at all. Like, we open the market right here, there is nothing that's telling me long or short at all. I simply need to wait to see where the market manipulates on open, and then I can trade right around 9:30 or whenever the model becomes clean. I can look to go ahead and take a setup to the opposite side of where the market's manipulating, right? So if the market wants to move lower, it's going to manipulate higher first on open, maybe put in an SMT. Wants to move higher, it's going to manipulate the lows first, put in an SMT, displace, pull back, give me everything I need to take along, right? So let's go ahead and literally just watch, right? At this point, market is looking bearish, so I kind of want to take a bearish trade. However, I have to recognize that on NQ we're within this huge fair value gap, right? So I want to just be a little bit cautious. So going into the day, on a 15-minute time frame, we have at 9:30. Zoom in on the 5 minute actually. So at 9:30, we're literally in the most random area ever. Like, we have no bias being built, no anything, right? 9:30 opens. We go ahead and we manipulate lows, right? Now at 9:30, if you look, we went ahead and we placed an SMT on this external low right here. So to zoom out to the 1 hour, 9:30 is right here. So 9:30, yeah. So we went ahead and placed some kind of SMT on this low, and then zoom back in. SMT right here at 9:30, and then from there, ES on the left here starts to rocket off, right? It was the upside of that SMT, so let's place it in somewhere like this, right? It had the stronger side of this SMT, so it goes ahead and starts to rocket off, right? And in my opinion, there's really no entry here, because the high that I would have wanted to target would either be this high, or maybe even this high. But if you look, that initial opening move from 9:34 on just completely ran all of those highs. So there's really nothing for me to target anymore, so I'm not going to be looking for a trade. However, if you wanted to take the trade, target this high, you probably could have gotten some kind of first take profit, something like that, before we ended up seeing this super clean short setup. So this is where I hop in. I'm looking at the charts, and if we see, we have an external SMT here. We have tons of SMT. We have this first bullish SMT, but I'm going to take that off the charts because I'm still expecting lower. We have on open, we had that SMT get put in on the lows, which then gives ES strength to push higher. Well, NQ doesn't have that strength, right? So we'll go ahead and mark this something like this. So we see initial SMT from this high to this high. So right here, SMT, ES, or NQ over here is looking much weaker. Then we go ahead and see another SMT right here. So now we have double SMT on NQ. And keep in mind, ES is looking much higher in the range, much more manipulated. So which one am I wanting to trade right? I'm wanting to trade NQ because if it's weaker right now, it's going to continue to be weaker, and I can potentially get a really nice trade off of it, right? So entering in, we're within this 5 minute fair value gap. So just quickly mark this in, something like this. We're around 10-10 macro. It's not perfect, right? Which is why this wasn't, in my opinion, an A+ trade. It was still pretty good in my opinion though, but we had buy side or sell side sitting right here. So now if we zoom lower, we're simply looking to just trade this internal model, right? We have double SMT. I'm just wanting to find my entry model and trade that. So going in to find this, what we end up seeing is another SMT get put in internally right here on these two highs. So now we have like 3 to 4 SMTs literally validating this bias. Like, this is everything that I want to see. And any SMT against it is simply just going to be noise, because narrative aligns with pushing lower, not pushing higher, right? So anything against this one is just going to be noise, right? So final SMT gets put in, and from there, we have changes of state. Now, at this point, I'm looking at this and I'm like, I see the setup, I see it potentially playing out, but I don't want to put some bands on it or some money on it if I don't see invalidation of order flow, right? And if we look right here, this low becomes the low of the 3 minute candle that opens the fair value gap. So look, right here, that low that we marked, that change of the state low, if that gets pushed below, that's entering into this 3 minute fair value gap, into this order block, into all that shit, right? So there's a high potential that once we make that change of the state, if the market wants to close down there, it'll bait someone like me who trades this model in. It'll bait me in, and then it'll go ahead and switch, right? So it'll just be a retracement into that fair value gap to go ahead and take longs, right? So because of that, I'm being super careful about when I decide to say, okay, it's good to place a limit. So thankfully the market blessed me with that confirmation, right? What it does is I'm waiting for this fair value gap to get ran through. I see 1 minute fair value gap, big one right here where the true imbalance lies. Even if we zoom to like the 3 minute, let me show you guys this quick exercise because I think it's super great and it's been helping me a lot recently. We see this 3 minute imbalance, 5 minute imbalance. Let's look 5 minute imbalance, right? 5 minute imbalance is going to be opened up and it's going to look something like this, right? So it's going to be kind of small. And it's going to be like this, right? 3 minute is going to be a little bit bigger. 1 minute is going to be a little bit bigger. And then even if we zoom down to the 15-second, our job here is to refine where the true imbalance is, right? So if we want to be trading the 1 minute model, we want to wait until this entire 1 minute imbalance gets ran through. But if you look, and if you have a keen eye for candlesticks, this is where the 5 minute imbalance rests, because that's just how candlesticks work, right? So even if we go ahead and we zoom to like a 15-second time frame, you'll see that same area act as imbalanced price action, because that's where price is truly imbalanced. It's not just a 3 candle pattern anymore, it's market structure recognition. So if we look, now we can maybe drag it out to this low right here, and then this high right here. So literally, like, we made the imbalance 0.1% bigger, but that shows us where the true imbalance price action is. So I want to see all of that get ran through to show me that we've invalidated order flow, right? I don't want to be taking a premature short that is just shorting into buy orders or shorting into bullish order flow, right? So I'm waiting for that all to get inversed. Once we see that get inversed, I place my limit at the change of the state, stop at the high, and from there it's butters, bro. Like this trading model plays. I tell you guys every single time I get on, I just trade my model and it plays. Look, we trade this down to the low and beautiful, 3.44. I mean, this is better. And let's look, I caught this little tiny move, right? Little tiny piece of the pie. Well, the market just continued to run for the rest of the day. Why did I not look at this later and I was like, bro, I missed out on 14R, like, oh my god, why did I not care? Because we have to understand that there's no confluence for us to move any lower than this low, because this is the model, right? The market moves in models, it doesn't move in trends, right? So that's why when you see people trading trends and they trade like with the dumbest shit ever, where it's like, dude, if you're in the trade, ride the trend until you see like bro, trend lines. That's why a lot of trend line traders don't end up being successful, because they do things like they ride a trend, but they don't understand the market doesn't move in trends, it moves in models. And that's why a lot of those traders fail. We have to understand this is the internal model. And whether or not you agree with me, this is how I trade, and I've found the results with this. So if you want to replicate my results, go ahead and trade like this. This is a way that gives a lot of traders clarity, and it will do the same for you if you accept it, right? There's a ton of different truths to the way you want to trade, or your strategy. You can say this is the true strategy, but at the end of the day, the strategy that works for you is the true strategy for you, right? So in my opinion, this is how the market moves. This is how I see stuff playing out. And once I see this low get taken, there is now no longer any kind of valid trade in my opinion, because at this point, the market could go like yesterday. Once we hit this first take profit, the market literally went like this. It tapped it, stood here for a very small second, and then catapulted back and stopped break even whoever still had runners in, right? So we don't know if that's going to happen today or if it's going to run. So because of that, there's no confluence to hold this any further. So all I'm doing is I'm taking that small low-hanging fruit, because I'm confident with that, and that's all I want to take, right? I don't need anything else besides that. So it's as simple as that, right? I'm taking my low-hanging fruit and I'm happy with that. So this is how I trade. This is how you really should be trading. You should be taking these low-hanging fruits and be happy and confident with that. And at the end of the day, following your system like this over and over and over with this clear-headed decision making is what is going to keep making you money in a consistently rising curve. So I think the biggest lessons of today were reacting, not predicting, because if you had any prediction on open, your prediction was most likely wrong. Nothing from this point tells you that we are going to open and literally dump. Nothing at all. So prediction is most likely going to be wrong. And because of examples like this, it just further stresses the importance of reacting, not predicting. There is no way I would have taken a short if I had a prediction. The only reason I took it is because I reacted. I watched, where did the market manipulate? Where did the SMT get placed? And I watched this happen in real time, like manipulation at the highs, SMT. Okay, maybe we take a short. We wait for confirmation. We wait for inverse for like, okay, I place my order. And I've seen everything that need to happen, like boom, 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 boom. I don't care if the market's going to go ahead and stop me out, because I've simply just followed my trading plan, my trading strategy, my trading checklist. I don't care what happens. And I'm using narrative too. I'm not just objectively following a checklist. which is going to be very good when you first start trading. But when you get further into it, you have to combine that checklist with your understanding and your understanding of price narrative, right? So even if a trade hits your checklist, you have to understand that, okay, maybe it's power hour or maybe it's later in the PM session or lunch session. You understand the trade's most likely not going to move that well. So it's things like this that we have to be able to adapt and grow as traders to get, and then we can apply that bit of market intuition and experience onto our strategy, and we see crazy results. So I hope you guys enjoyed this video. I hope you guys could get something from this video. If you like the way I trade, you like the way I explain this stuff, these concepts, go ahead and give some of my other videos a watch. I have a lot of great stuff on psychology, education, liquidity concepts, a lot of market maker concepts, including my exact trading plan. I literally give you guys everything for free on my YouTube. So if you guys have any questions, go ahead and drop them in the comments. And without further ado, I'm going to let you boys go. So peace out.